Hello guys, welcome back to my channel. Today I'm going to discuss about the assessment behind the live intraday trade that I took. I have posted a couple of screenshots on my Telegram channel. If you haven't subscribed to my Telegram channel, please do so, because I'll be posting some of the screenshots. Obviously I won't be able to make a live video while I'm trading, so because I have to focus on trading, I have to manage the trades. So I'll be having many open positions. That's the reason. But I want to explain the assessment and the reasons behind those trades. That's why I just take a quick snapshot of that market chart and then post it in the Telegram channel, so that you get a fair idea about what I'm trying to do there. One such trade I posted today was a Nifty. You might remember from the previous video how we used bull strength and the bear strength to assess the market direction and take the trade, okay, so that we hold a view on that. In this video I'm going to show you how we can use support and resistance, and based on price action analysis, how we could take the trades according to our perception about the market. For instance, I posted this screenshot on my Telegram channel today. So this is the screenshot I posted, and the time was around, I think it was here, somewhere here, okay. As you can see, it was here, and that's when I posted that screenshot. So the reason behind why I had a bullish view, as you can see from the screenshot, why I had a bullish view on this particular index or Nifty index is because you can see this red line, right? This red line is a support line, and that has been drawn based on the daily chart. If I go to the daily chart, you can see that this red line, I have marked the support zone, and as you can see, the previous day itself, I will have a view on the market, what it's going to be like. I was bullish on this market. However, I was expecting a sideways market, not a trending market, okay. That's one more thing as well, but bullish with a sideways bias, okay, and definitely not a bearish view on the market. So I had drawn this support and resistances like this, and if I go to the 5-minute chart here, and we will be focusing up until this zone here, okay. So this is all we'll be focusing on. That's where we had taken the trade, okay. That was our view. You see, the reason behind my bullishness, as you already got, the price was reaching this support, okay, and it was on a higher time frame. Remember, it's a daily support, and the view of about the market was bullish to sideways, definitely not a bearish view. And the market opened flat and started to come down. As you can see here, the market has been coming down like this, yeah, it's been coming down, and you might, it's very easy to think that it is in a downtrend, because the price is making like lower high, lower low, lower high, lower low, and you might question, why was I bullish on this particular thing? See, this is the reason actually, okay. One, the overall view about the market was bullish, right? I'll just try to take this out, sorry. I'll just clear all the triangles here, okay, and then I'll just leave one line. I think it was somewhere here, so I'll just leave this one for our reference. So now, as you can see here, the market, yeah, clearly it came down from this point here. Let's use the price action analysis to understand why I was bullish at that particular point. As an intraday trader, you should know, at least very close to, your entry should be so precise that when you take the trade, it shouldn't go against you too much. It should start moving in your direction as quickly as possible. That shows that you have got a right assessment and you got the right entry there. So it came down here, went up briefly, and then again a strong bear leg, yeah. now it has hit the support now, right? And you see how market behaves as soon as it hits the daily higher time frame support level. It just reacted very quickly. That shows like there are buyers sitting at that point. That's all we need. See, when we have a perception about the market and the market conveys a similar message, then it shows like, yeah, your assessment is right and you are probably ready to take the trade. It's like giving a go ahead for your view basically. And now all we have to do is wait patiently and then take the trade at the right time, because just one leg like this is not sufficient for us to take the trade. So we waited, and then the second confirmation comes when the price or the bears couldn't take the prices lower. You see what I mean? It was doing like lower low, lower high, lower low, lower high. If bears were strong, they should have been printing lower low, right? So that is the second confirmation. You see how you analyze these things so carefully, and you know the market sends you the signals subtly sometimes, but you have to grasp those things and then take the trade. It's always going to be like that, okay? So, and you should be able to understand these signals. So it went up sharply here, right? And that was the first time, and it didn't do that here, and never before in this leg. There was a brief up here, but never sustained one. But here you can see how nicely it went up, right? So that's the second confirmation. The first confirmation is this one at the support level, right? Let's try the support once again. At the support level, we see this kind of happening. That's a very nice price action concept, right? The bulls coming into the picture there, and bears fading out. You know, they couldn't print lower low, which they were used to do earlier on or till then. And now what we do, but this leg is pretty strong, right? You have to understand that as well. This leg is strong, and that means there are some sellers. And then this bull leg here, I mean very few bull bars and not as strong as this one, okay? So we have to wait patiently, but I was ready now because there are already two confirmations. All I wanted was a weak leg here, okay? And you know, you cannot be so sure that it's going to turn from this point. You have to wait for the market to say that it's ready to go up. And you know, usually what the market does is it takes out the weak bears and also weak bulls. Those who are weak, it's just gonna take them out. And as you can see here in this particular shakeout, you know, what normally happens is whoever have bought here, 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 they would, it's very likely that they have put their stop loss just below the swing low here. And you see what happened? The market just crashed and took off their stop losses straight away there, right? You see what I mean? It's just hunting the stop losses, right? You might have heard that phrase, hunting the stop losses. The market hunted those stop losses and then got rejected. That's the third confirmation a patient trader would look to see or love to see those things. And that's what happened. And on top of it, the next was a bull bar, which just confirmed what we were assessing. You see how patience actually pays? That's why you have to be very patient. Even though it's an intraday trade, you have to wait patiently and then take the trade, because you will get fantastic trades during the day, but you have to be patient and you shouldn't pull the trigger early. That's the main key takeaway you should be taking out of this lesson, okay, of this video, sorry. Okay, now we have this rejection and then the confirmation here, and this is where I entered above the high of this green bar. And to be honest, as I posted, I was also ready to take the trade if the price broke this green bar before that red bear bar. If the price was going above the high of that, I would have probably taken the trade as well. And as you can see here, the market didn't do that, because most people would have done that and it would have gone up from there itself. But before that, the market took off, hunted the stop losses that most weak bulls have put there, and then that's it. And it also trapped some fresh bears. So this is what the market does often, okay? It does too many times. And then you see how it went up. So that's the price action analysis and the support on a higher time frame. Using those two things, I took the trade. The second trade I posted on my Telegram channel was this one, as you can see here. If you haven't joined the Telegram channel, please do so by, you can see the link in the description box there below. So you see here, this is the one I posted, and I had a bearish view on this one because the arrow is down, right? So let me go to Tata Steel chart. Tata Steel, right? I'll show you why I thought like it would be a bearish sign. You see, it's somewhere here, so we are talking in the zone like here, in this zone, right? Now the reason behind that, because that's the most important thing that you have to understand. The reason behind these assessments and taking the trades and identifying the trade entries, you have to understand the reason why that was a significant zone and what the price was saying and what the market was saying. If you see this blue thingy there, the rectangle, it's from the daily one again. You see the price started to come down, right? This video is getting longer, but I will try to finish off as quickly as possible. Printed a lower high, lower low, lower high, and this one. And as you can see here, this was the zone that I was interested in, right? Because previously it just acted as support and then went up and the price broke, and I'm expecting this to act as a resistance. And on top of it, you can see that yesterday also there was this rejection, right? And so I was expecting some sort of rejection when the price goes up there. I wasn't expecting a bull trending bar anyway, so when the price goes up there, I was ready to sell. Although the trade came quite late in the day, I was expecting a bit early, but nonetheless I did get a trade as expected. So let's dig into 5 minutes now. So this is the zone I was talking about on the daily. So when price came to that zone, right, you see how it reacted. Till then it was very strong, right? It was, you see here how strong, and you know, bears were nowhere in the picture. All of a sudden you see these big bears coming in here. So that's the first sign you have to understand. And then bulls trying to take up, they couldn't even take it to this high. You see how all these things aligns with your view about that particular stock or index or overall market. You have to see those things aligning. Only then you can take the trade. Otherwise you simply cannot take the trade at all. If it doesn't align, you shouldn't be taking the trade. You have to wait patiently. And this doesn't prompt us to take the trade, because this bull leg is quite strong. We want a weaker leg, right? And then the bears strong again, and the bulls were again strong here, but they couldn't go to this higher on the second attempt as well. In fact, it couldn't even break and close above the previous high. You see what I mean? So it couldn't do that. So it shows their weakness. Even though there are some big trending bars like green bars there, that couldn't do it, and it can go. And if you see here one more thing, okay, if you just draw some like trend line like this, this was immediately taken out as soon as you see this big red bar. I mean, I took the trade below the low of this green bar itself. Okay, this green bar, the last green bar, I took the trade below the low of that one, because everything was very nicely aligning, and it started printing lower highs. Okay, not lower lows though yet, but lower highs, and that was enough for me to confirm my view, and I took the trade below the low of this green. And you see how it fell. I normally go for 1:3 risk to reward ratio, and depending on the time as well, I will have to decide on the fly whether I have to go for 1:3 and continue further, or just book profits even though if it hasn't hit 1:3. But don't worry about that. I will tell you more about the entry strategies and how to book profits or cut losses in future videos. I just want to tell you how intraday trading works. You have to be patient. Even though it's about just 7 hours, you shouldn't be in a hurry to take the trade. You will have plenty of time, unless everything aligns with your view about the stock or index or market. You shouldn't be taking the trade. Only if it aligns, you should take the trade. I hope this video helps. If you like it, Please share and subscribe with your friends, and also give me a thumbs up for this video. Thank you guys. See you soon.